Hi, everyone. Thank you for joining. My name is Henry Pattishman. I'm Executive VP of Identity Verification Solutions here at Regula, and I'm joined by my colleague, Andre Terekin, Head of Product and the man behind our biometric tech stack. Together, we'll talk about emerging trends that we believe will shape IDV in 2026. Before we begin, a few housekeeping items. If there are any audio issues, please try dialing in using the numbers provided in your invitation. Also, feel free to submit your questions live in the chat during our presentation. We'll answer them in the Q&A session at the end, or our team will address them as we go. This webinar is being recorded, and we'll be sending out the link over the next few days. In 2026, identity is no longer just about people. It's about AI agents, machines, signals, and systems, all acting on behalf of someone. This shift changes everything. How fraud happens, how we verify identities, who we trust, and who gets to act in digital spaces. Fraud isn't exploding in volume so much as it's mutating in form. What used to be a linear attack, a stolen credential, a forged document, is now a network of automated probes, AI imposters, and synthetic identities working in sync. The collapse of trust never starts with a breach. It starts when the systems can't tell what's real anymore. There are four forces that set the stage for 2026. IDV now applies to humans and non-human actors. 2025 accelerated deepfake threats, regulatory pressure, and fragmented systems. This creates a perfect storm. Fraud is evolving faster than defenses. You cannot transact, travel, or access services without identity. And now I will hand over to Andre to talk about the new shape of fraud. Over to you, Andre.
Thanks a lot. Yeah, let's talk about the new shape of fraud. And here comes our first trend, unchecked autonomy. Autonomous agents, AI agents, such as a copilot, chatbot, workflow bots, all of them now act with increasing independence. These agents initiate actions, create accounts, submit documents instead of us, and even triggers ID checks. And all of this leads to new type of risk. It is the risk of autonomy without oversight. You can think about such agents like when you're hiring an assistant instantly, trained on unknown data with no onboarding, with no accountability. What can go wrong with this? Unsupervised chains, prompt injections, or weak human oversight, what? So the question here is, when these agents misfire or get manipulated, who is responsible? The developer, the user, the system. And answer here is not clear. And this is why regulators are pushing human-in-the-loop requirements for high-risk actions. And it's why now IDVs must authenticate machines, not just the people. And trust frameworks need defined boundaries, accountabilities, and fallback protocols before autonomy scales further for such engines. And that's the risk profile of autonomous engines today. Let's move on to the second trend. Trend that is industrialized identity fraud is here. We have moved from handcrafted deepfakes made by some highly skilled single entrepreneurs to fully identity as a service. Fraudsters can now buy persona kit as a whole, with deepfake faces, morphs, animated avatars, even behavioral templates. And this dramatically lowers the barrier to breaking biometric systems. And here are three awesome examples. On the left is a classical deepfake attack. Nothing interesting except that this can be generated with a mobile app within a second. In the center is morphing, when two faces blended together to full systems that rely on face image comparison, and it's still especially dangerous for document insurance. And on the right is the top-notch example, because it is a face avatar generated from a single photo, and as you can see, it mimics a real movement with aligning and 3D features. cyberpunk kind of. And these aren't science fictions. These are actual tools that fraudsters are already using. And the line between the old, well-known physical attacks and digital AI-assisted attacks is disappearing fast. Because AI tools produce proof videos in a seconds. And surprisingly, attackers don't need technical skills any longer. TikTok level tutorials are enough, and they are all around us. And here on this slide is another great example, because it's a real mobile app that swaps your face with someone else in just one click. Hilarious one. People use this for fun, but attackers adopted this app for fraud. And previously established basic controls fail against this new wave. So the question is, what about solution? And solution is provenance. Provenance is becoming the new anchor of trust. And this is a shift from what it looks like to where it came from. At the same moment, the traditional defenses like visual liveness check, facial movement analysis, or audio inconsistencies, they remain foundational, but they need to be enhanced with deeper provenance check. And the next frontier of verification must move from perception to provenance. Uh, for example, advanced attestation and cryptographic proof to validate the capture source, or origin intelligence, such as device meta, source API, geolocation, everything what can help expose synthetic origin. And another one interesting is hardware level watermarking, where devices like cameras or scanners embed cryptographic proof of origin directly into images or documents. And C2PA provenance standards define how that authenticity data travel with the file. So the techniques are emerging as the next line of defense, because it's verifying the content at the moment of creation, not after manipulation. So summarizing everything, defending against deepfakes in 2026 requires the shift of the mindset from what does this look like to where did this come from? How do we know it is real? Henry?
Thanks, Andre. And now we come to trend 3. We're seeing coordinated and multi-agent AI fraud chains. One model creates documents, another impersonates a face on video, another runs credential stuffing, another interacts with agents, another adjusts tactics in real time. These synthetic fraud chains learn at machine speed. So why do traditional checks fail? Well, because most systems today still rely on what I'd call surface level checks. They rely on template matching, which only checks format. Great, but fraudsters know the format too. They ask for a selfie, but basic liveness can be spoofed. They don't use behavioral analysis, therefore they miss robotic input. How was the document held? How was the selfie captured? How natural was the movement? All critical aspects of today's IDV. And worst of all, no cross-checking. Many traditional systems never check. Does the visual data match the metadata? Does the barcode data agree with the MRZ? And so on. No single check is enough anymore. For businesses, this means the next wave of identity threats won't come from a single deepfake, but from AI collectives that learn and iterate at machine speed. Defending against them requires layered verification. Behavioral signals, navigation and timing patterns, velocity and IP intelligence, document and biometric checks, all working in tandem. The system must orchestrate multiple signals to outpace machine-driven fraud. Layered authentication creates a stronger defense. Trust is no longer optional. It is being legislated. Identity and AI systems must be transparent, explainable, and accountable by design. The result? Trust is becoming a stacked system, built from regulation at the top, infrastructure at the bottom, and accountability running through every layer. In this new environment, compliance is a permission to operate. In their latest predictions, Gartner says that by 2027, half the world will be under AI regulations. They will grow to cover 50% of the world's economies, driving $5 billion in compliance investment. AI is no longer confined to R&D teams. It's a board-level priority driven by regulations like the EU AI Act, NIST's AI Risk Management Framework, as well as rising scrutiny in the US and Asia. Organizations will appoint chief AI officers and set up internal audit frameworks. Non-compliant systems may be barred from high-risk sectors, not just fined. The message is clear. Trust is becoming enforceable. For IDV providers, this means models must be explainable, auditable, bias-tested, and fully transparent. Non-compliant systems won't just be fined, they can be barred from whole sectors like finance or travel. Andre, over to you for trend 5.
Most companies still suffer from fragmented IDV setup. They have separated tools for documents, biometrics, sanction screening, and more and more and more. And this fragmentation slows investigation and increases risks. And in 2026, this patchwork doesn't look sufficient to reliably prevent fraud. And I think it's high time to take a pause and carry out a quick poll. The question is, how would you describe your organization's current IDV setup? Fully unified, orchestrated, partially integrated, fragmented, lots of separated tools inside, and probably you are exploring an IDV solution now. And finally, just no formal IDV setup yet. Let's have several seconds to give you time to answer and have a look at results. Okay, let's have a look. Fragmented. Yeah, that's exactly what we're talking about. And the industry is shifting to platform orchestration. Okay. And this shift is not about one vendor covers everything, but about one place where everything happens, connects, logs, complies, and finally brings control into your customer verification procedure. And for enterprises and IDV providers, that cool animation. Yeah. Let's jump to the next slide. For enterprise and IDV providers, that means mutual support of all necessary components to perform required tasks in all relevant processes. And this unified orchestration layer brings many advantages, such as central management, end-to-end traceability, policy enforcement throughout the system, general regulatory, great regulatory readiness, and faster fraud resolution. And all in all, many different advantages. So, Henry, over to you for the next one.
Thank you. Another trending innovation is the reusable identity. The concept, verify once, reuse everywhere, is simple and it's been around for years. A vision where individuals can prove who they are across platforms and borders with a single secure credential. In practice, this means a reusable digital identity, a verified set of personal attributes stored in a wallet or trusted platform that can be shared multiple times without repeating the full onboarding process. Sounds simple. The trend itself is very clear. IDV vendors will shift from one-time checks to continuous trust providers, issuing attestations, anchoring reusable credentials, helping ecosystems interoperate. At the same time, big tech, banks, and telcos may move faster than governments, offering wallet-based credentials for payments, age checks, and KYC reuse. Reusable identity will definitely redefine onboarding and customer experience. But, as always, there are a set of challenges. Adoption has lagged because of 3 issues: interoperability, liability, and trust. Many countries are building standards and issuing reusable digital IDs. But the question is, who's responsible if a reused ID fails or is compromised? Will businesses trust third-party verification? Can individuals control their data if IDs are issued by banks or big platforms? Until these issues are resolved, reusable identity remains limited in adoption. Now we come to trend 7, age verification. Once an optional check, is now becoming a legal requirement across major markets. They're no longer limited to adult content or gaming sites. From the UK's Online Safety Act to EU digital platform rules and upcoming US state laws, platforms must know the age of their users. This means verifying individuals who may never have been asked for an ID before. We actually had this recently introduced in Australia where for any social media, you have to prove that you're above the age of 16, which came into law just earlier this month on the 1st of December. So it's going to spread all around the world now. Balancing this requirement with privacy is a real challenge for businesses. Businesses don't want to store more IDs or sensitive data. Privacy-preserving verification becomes essential. Zero-knowledge proofs that confirm 18 plus or 13 plus or 16 plus without revealing identity details. Device-based age attributes that are stored locally on secure hardware. Contextual or behavioral signals that infer age without collecting sensitive information. Or hybrid approaches where IDV vendors verify once, then issue a reusable zero-knowledge age token. Age is becoming a universal trust signal, and businesses must handle it safely and at scale. Andre, over to you for trend 8.
Do 8, because I think it's most favorable. I like this trend, probably this a little bit futuristic quantum computing. It's closer than most organizations realize, and it has huge implication for encryption and quietly reshaping the security assumption that digital trust is built on. Because once quantum computing breaks RSA and SSE, today's signatures, certificates, and authentication can instantly become invalid. And the icing at the top is that while quantum attacks aren't here yet, adversaries are preparing by harvesting encrypted data now to decrypt it later. Oh. And for IDD sector, this means the following changes. Document signing and credential issuance system must shift toward PQC compatible algorithms. Key management and token generation process need to be fully auditable and agile. And long-life credentials like a driver's license, passports valid for that might be valid for 10 years must be built to survive the quantum era, which is potentially decades ahead. And governments and standards body are already moving to this direction. For several examples, NIST has finalized its first PQC algorithm suite. The European ENISA is issuing a migration guidance, and ICAO is exploring quantum resistance e-passport framework. And in 2026, for forward-looking organization, they will need to begin quantum migration. It includes such actions like map cryptographic dependencies and understanding which systems and credentials would break first. Being tested needs selected PQC algorithms and hybrid cryptographic models, and demand crypto agility from vendors. For example, the ability to rotate keys, update algorithms, and patch protocols with minimum disruption. And summarizing everything, quantum resilience is becoming the next compliance frontier. According to Forrester's analysts, over 5% of IT budgets will soon be dedicated to preparing for it. During our talk, we're talking about identity all the time because our business is built around identities. But the definition of identity is breaking wide open because the The next era of identity verification doesn't look like human-centric. It is going to be rather ecosystem-centric, and keeping trust intact will require entirely new rules of engagement. So let's dive into these new paradigms. And here's trend number 9. As AI agents gain autonomy, this shit is happening. Because machine customers, like algorithm entities that act, buy, and negotiate on their own, they are beginning to participate in the economy. They will book flights, open accounts, sign contracts, and even spend money. And all these actions will require identity verification, authorization, and accountability. So the question is, how do we know which actions were taken by a human versus an AI delegate? And how do we verify an algorithmic customer? Perhaps they need their own digital identity, or perhaps we need to anchor them to the human or organization behind them. And legal frameworks for algorithmic personhood may eventually emerge. Early signals from European AI Act and NIST suggest that AI systems must remain traceable and to accountable humans behind them. But until such frameworks mature, clear boundaries are essential. What an agent can do autonomously, what must be logged and audited, and where humans must intervene as the ultimate decision maker. Let's jump to trend 10. Global identity is fragmented. Countries are building sovereign digital ecosystems with local identity rules, local AI models, local clouds, and what once looked like a path toward a single global digital identity is now diverging into national and regional ecosystems. And according to Gartner's, the top strategic prediction for 2026 and beyond, by 2027, around 35% of countries will be locked into regional specific AI platforms built on proprietary contextual data. And in practice, that means the rise of digital national state ecosystems, where domestic data, national digital IDs, local AI models, and protectionist cloud rules will be combined into close sovereign infrastructures. And even though it is a logical movement for governments prioritizing data sovereignty and cybersecurity, it comes with a price. For example, for global businesses, it means, first of all, compliance bottleneck, because every region defines its own onboarding and verification rules. Then cross-border verification failures, because an ID trust in one country is rejected in another. And finally, rising operational costs as identity system must adopt to multiple technical and legal requirements. And standards for verifiable credentials, like digital trust credentials or W3C's verifiable credentials, promise to bridge the gap. But in practice, interoperability is losing ground to fragmentation. And for identity verification industry, this marks a turning point because global IDV platforms will need to behave more like local operators, offering regional specific deployments, compliance layers, and sovereign data hosting. And the next frontier of identity trust might not be global at all. It might be federated, fragmented, and fiercely territorial. Henry, it's over to you.
Thanks, Andre. Regional identity ecosystems create fragmentation, as we've just discovered. Different rules, different identity frameworks, and the moment that happens, digital currency can't be neutral anymore. It needs identity baked in. So sovereign ID leads directly to sovereign programmable money, and that's trend 11. So over 130 countries are exploring CBDCs, central bank digital currencies, and many are testing programmable features. Money will soon verify identity before it moves. Every transaction becomes a trust event. The question, who are you, merges with what are you allowed to do? In pilot projects, for central bank digital currencies, pilots and tokenized finance, every digital unit can now carry built-in logic that authenticates itself before it moves. Who can spend it, where, and under what conditions? Identity becomes inseparable from finance. Verification happens at every transaction. IDV providers will play a foundational role in this convergence. Programmable money can only enforce rules if it's anchored to a trusted identity. That means IDV systems must verify users at the point of issuance, not just at onboarding. Access rights must be linked to biometric or cryptographic proofs and continuously checked so they remain valid across ecosystems and times. The next generation of IDV must reconcile two opposing forces: programmability on one side and privacy on the other. That means embedding selective disclosure, zero-knowledge proofs, and decentralized credential storage so that transactions can be verified without exposing the person behind them. Modern verification is all about providing the right facts with less data. If money, systems, and AI agents can all verify themselves, what becomes the rarest and most valuable signal left? And this is our trend number 12, human reasoning. In essence, the ability to think is becoming a new kind of human watermark. As AI replicates human reasoning, new cognitive verification challenges arise. It won't be providing who's real, trying to prove who's real, but who's actually thinking. As a result, verification will be moving beyond existence and into cognition. Proof of reasoning is the next frontier. The ability to confirm that a human mind, not a machine, is behind a decision or action. Early versions of AI-free assessments will take these shapes: behavioral verification based on reaction time, comprehension, or adaptive problem solving. Dynamic challenges designed to test live thinking rather than pre-generated responses. And role-specific cognition checks in hiring, secure access, or high-risk transactions. But the paramount question remains: can cognitive verification reliably distinguish humans from machines? Or does it risk crossing into psychological surveillance? What exactly counts as proof of reasoning, and who defines it? In parallel, human-to-human verification is quietly regaining ground, with context, empathy, and evidence-driven judgment. The future of verification may not be man or machine, but a hybrid system where reasoning itself becomes the ultimate credential. The shift is profound. Identity moves from a checkpoint to infrastructure. Trust becomes programmable. Verification becomes continuous. And the winners won't be those who verify fastest, but those who verify deepest and fairest. For years, trust was about proving identity, who someone is. But the next decade shifts the focus. It's about proving how people think and how systems behave. Identity is baseline. Behavior and decision-making are what will truly matter. Fraud isn't static. It's evolving, learning, and scaling. It's testing your systems every day, and it's getting better at hiding. So the question isn't whether you have security. The question is your security evolving as well? And is it evolving as quickly as fraud is evolving? Andre, do you want to do this section or me?
We'll take care about this. Okay, let's start with questions. First one, with deepfake tools becoming so cheap and accessible, how do we realistically keep ahead of attackers? Do we need new type of liveness or behavioral check tool? Wow, awesome question. You know, no single test beats deepfake. You need to think about some complex approach, some kind of layer approach when you combine different protecting methods like alt, well-known aliveness check, new establishing behavioral check, and another one which we today talked about, provenance. When you check origin of your data. Okay, move on. Another one. We are relying on existing technology to protect against the fake fraud and video conference. Is that not adequate? Well, it relies to the previous question, because generally, yes, it's adequate, but nowadays it's not enough. You need to think about combining different approaches to be sure that you keep attackers from getting in your system and protect you well. Next one. Do you think a reusable identity will actually reduce onboarding friction in regulated banking, or will liability concern make adoption impossible? Henry, I think
I'll
it's
take this
up to
one.
you.
Yeah, I'll take this one. Well, it will reduce friction, but only when governance is clear. Banks need legal clarity on liability. So, who's responsible when a reused identity fails? And that is a critical point. We expect early adoption in cross-bank KYC sharing networks, consortium-managed identity wallets, and fintechs and bank partnerships where trust anchors are established. Banks won't outsource risk, but they will reuse verified attributes behind the scenes once standards mature and regulations are put in place. We got any more questions out there?
Yeah. Let me check. Yep. Marketplace demand on their fine ordinary user quickly and cheaply. Good. How do we handle age checks, identity checks, and fraud without creating too much friction? Great question. Because I think there are two winning strategies here: segmenting or cohorting users and establishing long time trust. Cohorting users means that you can think about this like entering someone inside your house. I think you don't want to allow everyone to enter. You can set your door ajar and have a brief look at who is in the outside. The same to cohorting, like checking scoring users and allowing low risk user to enter with less amount of checks, lightweighted procedure applied with less friction. But if you score this with high risks, you can ask additional questions like who you are, please provide some evidence, and so on. And I can share with you interesting example how we can think about age verification, because it's worth trying to assess age just by one photo without additional checks, and particularly avoiding touching personal identification information. Yeah? But if you have a look at the results of NIST tests, that's really tedious test with a lot of data used to check different vendors. Even the leader of this test has some mistakes. And it means that it's probably not a good idea to use this directly. And even NIST recommends following the procedure when you just step away from your threshold. For example, you are checking someone 18 what it's older than 18 years. Yep, you can step to 25 years, just assess age by photo, and if age greater, perfect, lightweighted procedure coming. If not, you can ask a document. So this first strategy, just to segregate your users in different risk group. And the second strategy, establishing long time trust. It means that you can onboard and enroll your user firstly, and after this, you know a lot about your user, so you can reuse this information, which we discussed already today, just to purpose of simplicity. So next time you don't need to ask a lot of different proofs from your user. You can ask only pass through simple procedures. For example, taking a photo and scan through already existed users, your database, yep, and provide grant access. And if it's new user, okay, we need to apply a more complicated procedure. Something like this. Okay, let's move on. Banks are very slow to adopt. Which industries will be the faster to adopt deepfake fraud technology? Big tech like Microsoft, Meta, and Google for their conferencing tools, Teams, Gmail, Zooms, etc. It's an interesting question because I doubt that banks so slow as you might think. Because for them that's really kind of threat, yeah, being cheated by someone.
I think, Andre, I'll put my 2 cents on this one.
Yeah.
Typically, the ones that adopt technologies are the ones that have got most to lose. So anything to do with finance is where they would typically apply the latest and greatest technologies in order to protect themselves from potential losses. So yes, traditional banks are probably a little bit slow, but when we've got a lot of neobanks and online banks that are 100% reliant on technology, they tend to be the fastest adopters. So I would say fintechs and neobanks would be very fast. But yes, traditional banks are typically slower because they've got the fallback of branches and in-store visits where face-to-face IDV can be done for anything that is of high value. So I still strongly believe that the fintech sector is one of the fastest adopters. Um, Big tech always does adopt because they develop the technology themselves. So no better place to trial it than in their own environments. But they don't have as much to lose necessarily directly as do financial organizations. So I think fintechs and neobanks are still the industries that will adopt deepfake fraud technologies the fastest. On that note, I think that's all of the questions that we have. So we can look to wrap up. So thank you very much for joining us today. If you have any further questions, ideas, or want to discuss how this applies to your use case, just reach out. You can either scan the QR code or email us directly. So hopefully this was all valuable information for you, and we hope to see you next time.